Bam.
I'm Matthew Abenante, and it's so great to be here on the Break It Down show.
Hell yeah. Hell yeah. I love it. Right now, gosh, the market is going a little crazy. I mean, that Tesla stock that everybody bought 15 years ago, you're smiling right now because that stuff is roaring. What are
I
your
wish I
thoughts
bought
in
some.
general? What's that?
I said, I wish I bought some.
Yeah. Yeah. But there's a lot of things that we all can do in investing. And I think like one of our biggest fears is when the market crashes, 2008 being, a giant one for everybody, unless you're taking money out on the 8th, the 9th, the 10th, whatever the date is after that crash, ultimately everything goes this a ways, right?
Oh,
Why
yeah.
don't we why don't we like that? Why do we love to sell low and buy high? Why?
It's they always talk about they, and they being sort
No,
of the
they.
prognosticators, the folks you hear in the media. It's always this, they drive up the fear and they project it out. The world is coming to an end.
Yeah.
Um, and, when people hear that, as they say in mafia parlance, they hit the mattresses. And with that, they liquidate everything. And that's usually the first instinct when, really probably the best thing you could do. And look, I'm guilty of it too. I've messed up on this, but that's sort of where if you have some savings, you know, let let everything sort of shake out because you're going to have that fear and step in. So, I mean, for example, if you were an investor in June 2020, you've done really well.
Mhm.
Post the initial pandemic shock, especially in my world, dealing with small cap companies, startups, early stage companies.
Yeah.
Uh, if you went and you can go basically in the Russell 3000 and pick the whole lot of them, and you did really well. And it was really for a short period of time. It was very it was very scary, but then it was sort of like, well, you know, what was it? I think we saw. I forget which company, but there were a couple of companies where you were like, oh, this stock is yielding 10%. This is crazy. This
Yeah.
shouldn't be. This is way undervalued. And so a lot of people did really well.
Yeah. I don't know
Yeah.
if you saw it yesterday, Donald Trump, and we're not going to make this thing political, but yesterday, Donald Trump, made a long address, and he is getting these companies to invest hundreds of millions of dollars into the United States. Is that a good proxy for like, hey, these are investors looking at something that's undervalued right now?
It is not only a good proxy of that, but I mean, just anecdotally from my world, and again, dealing with the early stage companies, these are all companies that are very much capital intensive. So they're always looking to raise money. And
Yeah.
for the last 3 years, really, they haven't been able to raise capital, at least, or they've been able to raise capital, but it's very expensive money, high interest rates, inflation,
Yeah.
limited growth. So all of that, I think, trickles down and almost creates sort of a it's almost like a vacuum, if you will, because
Mhm.
now, I mean, SoftBank isn't which is the bank that came out yesterday. We're talking about $100 billion of investing in the U.S. But they're a small bank in the grand scheme of things. So if that's happening and they see the
Right.
opportunity there, I think that's going to translate to a lot of bigger companies, especially those looking to curry favor with the president elect.
Yeah. I know a lot of small business owners, and none of them are like, man, there's hardly any regulations around here. It's so easy. My life is simple because I work for myself. It's always the other way around. We're like, the paperwork, well, of course, everybody complains about taxes, so we barely even need to cover that. But the ability to remove some of the things that keep money abroad or keep money going in a different direction and back into your business, there's real value in that. How do you see that if you look at a public company, you know, mid cap, large cap, whatever it's going to be, emerging growth? How do you see that money going in a different direction? What does that look like?
Well, I mean, I hope it does. One of the things I can speak to at a personal level is that it has been practically impossible for small American companies to go public. If you
Mm,
look at the IPO calendar, like look at the IPOs this year in 2024, I would, without taking a look at it, if you looked at IPOs that raised less than, let's call it $100 million, I would venture a guess that it's somewhere around 70% are foreign or international companies. Which I've always said, and look, a lot of my business is international. So, that's still not, it's not something that hurts me necessarily, but I know for the economy, it's not a good thing. Um,
mm,
you know, so seeing company, and when you say, companies bringing their money back to the US, it's not just the actual corporates. I would say also institutional investors bringing their money into the US and looking at American companies that have a strong investment thesis that
yeah.
cater to our local economy. Um, most a lot of my clients are companies that are leveraging the growth profiles in their respective countries, and they're a proxy for it, whether it's shipping and logistics, high technology, so I would love to be able to go and work with more American companies that you know are going to come in and help the American economy
Mhm.
and see more of those. I'm not saying let's stop the international ones, but let's try to boost seeing the American companies come in and take their shot at going public and raising outside money and trying to
Yeah.
grow businesses.
One of the terms, I love thinking about terms, right? And it helps us understand sometimes when there's bullshit around. And when people talk about greed, I don't know exactly what they mean. And so, but it's a charged word. And so I put greed in the category when I hear that, when I see it, read it written, I go, bullshit abounds, right? Because I don't know when I'm greedy. If someone offered me more money, I'm going to take it. Maybe in some cases I'll be like, "Well, I don't need that money." Maybe, but for the most part, I would love to make more money each year. And if there was a program that I can leverage to grab some money for free, gosh, that's what you're supposed to do as a producer, as a CEO. It's like, hey, I got some free money. Whatever you're supposed to do. What is greed? When does greed start, and when does being cagey with money stop?
Yeah, that's interesting. That's a really good question. You know, I don't know. I don't, I don't like witnessing and seeing greed, like true greed, not
Okay.
this whole, what I would say, maybe the media and pop culture views greed as, say, rich people, or say the CEO of, an insurance company, and they're looked at as, oh, well, they're greedy. And it's like, well,
Mm.
if anything, I would say, uh, if you want to start at greed, you start in DC. You start with the politicians there. Um, I mean, then you can, you could look at sort of the um, like the university system,
Yeah.
How you have kids, you're sending kids to take on massive amounts of student loans on the promise that their, that their degree is going to mean something, it's going to mean a career. But meanwhile, the endowments just keep growing and growing, and no one cares. They don't get
Yeah.
taxed. It's absurd. But real greed, that's real greed to me. It's sort of the usage of, or the pulling the levers of capitalism in a way that, I would say, and this might even come out a little socialist, but I'm not a socialist, but in a way that if it really creates moral hazards to society. It's like, I look at it, it's like the over the weekend there was I was out on the road, and there were two cars in front of me. There was one of these self-driving vehicles, like that was on like a test. And I don't look at that as a positive thing. I'm thinking, someday that's going to replace a trucker, and that means someone's going to lose a job and lose an opportunity, and that has a trickle down effect. Just like what we were told that, oh well, shipping the manufacturing process overseas, provides lower costs, and brings greater value to shareholders, which somewhere in my world, that's sort of what I deal with. Like, I always deal with conveying a message that delivers value to shareholders. But I feel like when you step over that line, and you're doing something that I think truly has a negative effect, or is, the cost benefit analysis is looked at as a real negative to things. I mean, people can be, I've seen plenty of rich people be very stingy with their money and all, and whatever, like that. I just usually don't interact with people like that. But it's not greedy to go and look to maximize yourself and try to maximize profits. But if you know that you're having this network effect affects whole neighborhoods and communities, then I think you have to take on sort of there's almost a greater purpose, where you breach the line of being truly greedy. And and that's something I've always, I don't like working with people like that. I don't work with clients like that. I've done that already. It's no fun. It's no good.
Yeah. Yeah. But that's the thing about life, right? In general, there's all these different levers you have to balance at one time if you choose to even pay attention. And then you find out that a lot of these levers don't need balancing at all. Just let it fall whatever side, and just deal with the fact that that lever is down and this one's up, and go focus on the things that really truly need balance. And yeah, greed and caginess and opportunity, these things do have to work together. I'm thinking about baseball right now with this example. If you constantly, and this is a theory of mine, I haven't really sorted this out, but if you constantly focus on taking every single possible micro advantage, just so that you're always playing the best possible, least risky baseball, even if it's largely a coin flip, there's a cost for that with the fan experience. And if the fans are like, ugh, and they don't want your product because it is overly driven by numbers, it causes you distance between you and your customer base, you and ratings, you and all these things that are I'm a real big believer on affect over effect. If I can get the emotional response to the things that I put out there, that's good for me, then I'm going to win over the guy who's like, I'm writing pamphlets to tell you how great the baseball team is. Like, no one cares about that. What they care about are the things they care about. And gathering those things is that balance you're talking about.
Oh yeah. And, it's funny. It's with baseball. It's really with all major sports. I feel like in football, you need to have a law degree to figure out if a catch is a catch, or if it's pass
Oh my
interference.
God. It's so true.
or if where was the plane, or you need to be a scientist or an engineer to determine if the ball broke the plane, and
Oh
if
yeah, yeah.
so they've killed. I feel like they've just destroyed the fun experience of it. Especially in the tight game.
Oh
Basketball
my
is
gosh.
basically unwatchable because it's a
Oh
3-point shooting contest.
yeah,
But again, what we were told is, the big brains behind the scenes, they went and said, hey, the populace wants high scoring. They don't
yeah.
want to see defensive battles. So they said the same thing in football. And that's
Yeah.
why, you breathe on a quarterback, it's a penalty. And
Yeah.
you can't do anything to the quarterback. They are not a football player. They are an entity
Right.
of itself. So
Yes.
you cannot mess with them. But that's
Yeah.
sort of that point, to your point about sort of the greater good, and trying to sort of move the levers to appeal to the masses. But then
Yeah.
by doing that, you lose a lot of the folks that have been there from the very beginning, or since the moment they were able to understand how
Right.
you score the game. Maybe they watched it with their family when they were little and everything, and now they wake up today, 2024. Oh shit, this is a totally different game than it ever was. I don't recognize it. Baseball, I mean, I'll tell you, it's interesting that you were able to tie this in with baseball and everything, because the last thing I heard was that you needed to have this balance, the competitive balance. So you instituted these things called the luxury tax. But meanwhile, now out of the blue, they have this thing called deferred salaries.
Yeah.
And look, look, I'm bitter because I'm a Yankees fan. To see
Yeah.
Soto walk away like that, honestly, if I were him, I would have taken the Mets deal too. Not only because of the
Yeah.
money, but because Barr, if he won a championship for the Mets, that he'll be forever anointed in in Queens.
Yeah.
Meanwhile, he wins a World Series. I guarantee you, 80% of Yankees fans can't name who played third base on the 2009 World Champion Yankees, because it doesn't
Right.
matter, because it's like, oh, we're supposed to win. So if I'm
Right.
Soto, I get the most money. I get access to Steve Cohen.
Absolutely.
Steve Cohen. Steve Cohen cut him the check, and then Soto probably cut the check right back to him to have him invested, and
Oh
that's
yeah.
what he's doing. And so, and again, the bar is not particularly high in Queens, so have a relaxed, nice time. All right, you got to deal with the New York media, but hey, and that's why.
Yeah.
But then again, it's like all of sports. It's become it's become now. You need to be an engineer, or you need to be a lawyer, or you need to be a statistician,
Yeah.
or you need to be able to understand like discounted cash flows, and be able to run analysis on these long these 10-15 year contracts, how it's all it gets affected with the luxury tax and baseball, or the salary cap in the other sports. So it's like, I think of the little kid going to the stadium or going to the arena, and they're like, oh, all right, is it time? Chances are, if the kids are going to the arena or to a stadium, they have a screen in front of them. So maybe
Yeah. 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 And if not, there's still the screen in front of them up top.
that's true. You got many screens,
Yeah.
you know. But
Yeah. You really, I mean, you nailed so many things on the head that are problematic for any kind of company. Right? You're trying to, and this goes into foreign policy, not just baseball, but when we are trying to move a population towards our brand, whatever that brand is, it matters how you behave and if that behavior is working for you. You know, some things take time. You got to prime the pump and you got to repeat the action. And all of a sudden, like somehow Mike Tyson has repaired his image. He's no longer this rapist guy, right? He's a lovable, old, wise guy who takes mushrooms. But the path to these things is really tough and it takes a lot of energy and money. So if you are running like a mid-cap sized company,
Yeah.
how do you compete when you don't have the cash for the lobbyists? You know, you don't have the, you know, you're desperate to get influence to get included in somebody's index because just by simply being in this index or that index, oh my gosh, like that makes your job a whole lot easier when you're trying to run a company.
Well, that's the thing. It is not a level playing field here in the U.S. And I'm hopeful that things will change in January. I didn't see a whole lot of change in that regard, you know, back in 2017. So I'm not
Mm,
particularly optimistic in that. But
mm,
especially in the United States, the fact of the matter is you know, if you are a company with a market cap under $1 billion, you are already at a massive disadvantage to most other companies that have bigger valuations than you do. Um,
mm,
you are, unfortunately, you are, in most cases, you are banned from being a part of, you know, being on, you know, some of the major financial networks, um, because you're considered too small and too risky. Um, you know, the um, the environment for investment banks to write research on companies in the last 15, 20 years has been gutted at the
mm,
detriment of small companies. And, you know, you know, and I'll go through this really quick.
mm,
Back in the day, an investment bank, you know, especially the ones that would look at the smaller companies, they would write research reports and distribute it to their clients on these companies, and the clients would be investors. And they would go and talk about these new companies, or you know, some wild technology or something, you know, in that realm. And it was unique. You know, this
mm,
wasn't bracket research. This was, you know, really, you know, unique companies that had growth profiles where, you know, you can realistically 8 to 10x, you know, your investment. And you know, the rules changed, as they always do. And let's just say a lot of the lobbyists came in, because remember, from their perspective, the bigger companies perspective, they want to keep the companies down as much as possible. And the reason being is, you know, they can acquire them for less, and they can, you know, through their, you know, use technology, you know, try to scope out, you know, M&A opportunities, at the you know, at the cheapest possible price. Um, and it's, you know, it's disgusting. It's a shame. And there are many other instances where, you know, if you're a smaller company, you have certain inherent disadvantages. Most institutional investors will not meet with
mm,
a company if their stock is trading below $10 a share. Then you have the fact that in the United States you have two real places where you can list your stock: the New York Stock Exchange and the Nasdaq.
right.
Um, Trading over the counter, it's just non-existent. It used to be. It used to be when there was a, you know, a market for it, but it's been proven that, again, like I said earlier, if you're a small company, you need to access capital. You need to raise capital. You need to be in capital raising mode. And if your exchange does not provide a forum for investors and companies to meet and to interact, you don't really, you're essentially, you are a public company paying all the costs of being a public company, but having none of the benefit of being a
Mm,
public company. And that's what I would say, more than half of those companies trading under $1 billion market cap, those companies are just like that. they're paying the costs, which are significant. And as a percentage of, whether you want to look at, as a percentage of revenue, what these companies pay for in SEC fees and, attorneys and auditors and people like me and investor relations and all these different functions that these small companies that they usually they have a limited head count. They're they keep the budget pretty much to the bone, and they're just trying to try to grow consistently, and they are baked in at this unique disadvantage. And it's a shame because you're finding fewer and fewer true success stories.
Right.
Companies that came from sort of this, 50 to 100 million market cap. That's really that's like nano cap. But from going from there to, being a large cap company where pension funds invest in you, and all these other high level institutions, sovereign wealth, things like that. It's like those opportunities are few and far between.
It is amazing. So there's so many things to ask you about. It's amazing to me the size of these companies. You're talking about 50 to 100 million being nano. Man, I don't even exist. What's smaller than Pico? I can go make a bunch of money next year and have like my best year ever, and I'm not even whiffing any of those numbers. And then I don't know if you saw this story, but Macy's reported of this loss internally. Someone had scraped $150 million, everybody, and it was over the course of some time. And like in last quarter, they took they took a miss when they reported their earnings, and they only made $4.7 billion. I don't know a soul that shops at Macy's or any Macy's brands anymore. It's just not what it used to be. And yet they're making $5 billion a quarter. Oh my God. That's crazy.
Well,
yeah.
Yeah. I mean, look, there's still some name cachet to it, especially I'm in New Jersey. And so when I go into the city, I'm forced to pass Macy's. So, and especially this time of the year, there are still loads of people going through there, but that's just one store. It's a big store, but it's just one. Look, it's I think part of it is looked at. It's sort of a tradition thing, especially this time of the year. There are a lot of families that make it a whole event to go walk through Macy's.
I'm not against Macy's, by the way. It's amazing to me that $5 billion runs through that place in a quarter. And they're like, oh man, disappointed. Like that just, that just shows you how much money, how big these companies are. And Macy's isn't anything big compared to, Apple, right? I mean, that's
no, they're in deep trouble too. I mean, remember, the billions of dollars that go through Macy's. That's just revenue. They haven't paid anyone yet. They haven't serviced their debt. That's big deal. And that's where you get into trouble. That and the fact that they still haven't, after all these years, they still haven't been able to get their cash controls in place. They're always fighting with their creditors. Like they're always having problems with them. Unfortunately, going back to your original question, your original point about how, these are institutions. Like I look at Macy's as basically a one-store shopping mall. And look at what's happening with shopping malls. Well, Amazon, in my opinion, maybe to a lesser extent, Walmart and Target, but really it's Amazon that's gone and destroyed the brick and mortar mall business in most of the country, because what better scenario that you can get your packages the next day, and it could be a whole variety of goods and things, and but does that make our economy, like, yes, we're getting things a lot quicker, a lot more efficiently than we ever did before, but at what cost? You know,
No.
I mean, yeah, all right, the kids don't have somewhere to go Friday night there, but then again, they're all probably on screens and they just talk to each other over, over social media. But having a vibrant mall culture used to be a thing,
Yeah.
and the fact that that part of our economy's gone away is really an interesting case study.
Mm.
Um, I wasn't never a big fan of the malls because I'm not a big fan of big crowds, but
Hmm. Hmm.
I get it, and it's a shame because I know a lot of brands wouldn't be the brands they are today if they weren't part of, maybe they weren't next to an anchor store that did really
Sure.
well. So,
Yeah.
um, but meanwhile, it's like one thing, I don't know if you ever noticed this. Remember when Walmart was the number one retailer in the world, and
Yeah.
whether CNBC or Bloomberg or whomever, they'd always put out these hit pieces on them, and maybe rightfully so, maybe,
Maybe. Right. Right.
but they would always put something out on them. You never ever hear anything, at least not nearly the magnitude on Amazon. And if anything,
Sure.
you only hear about Amazon when it comes to some of the worker issues or maybe the placement of the warehouses, but really you don't. It's
Hmm.
nowhere near the outrage, the fall outrage that we heard
Yeah.
all throughout the years. I mean, I remember when I was in college, and one of the I think it seemed like every year we had a damn case study on why Walmart was terrible. And
Yeah.
but now I look at it as like, in just a short period of time, Amazon has had more of an impact on our economy
Yeah.
than Walmart ever had,
Yeah.
ever.
Yeah.
I mean, they've gone. Shoot, I have family in rural Nebraska. That when
Hmm.
this was back in like 2007, 2008, when a Walmart moved into town, all of the local businesses went under. Like they saw
Yeah.
volumes cut by more than 60%. They were out of business within a year.
Yeah.
And but meanwhile, it's like I know Amazon has bankrupted plenty of businesses through their practices, and
Yeah.
you don't hear anything. You don't hear anything about that.
It is interesting when these things happen. Yeah. Uh, I also remember this is a great thing. This is sort of like the Jewish dilemma. Free bacon. When Walmart, and it's may still be true, Walmart sells more organic food than any other market. So it's like the liberal dilemma. Like, oh, I hate Walmart, but damn it, they sell so much organic food. We have these conundrums, right? Where their system works. It works. Walmart system, Costco's system, all these different places that figure out moving a lot of this, and this, the supply chain stuff, the movement of things. Nobody in the world moves things more efficiently than the US. And we use rail for a lot of it. We use trucks. It's hyper efficient. We use barges, and we have
Yeah,
a very, very capable. My buddy, his name's Cease. He's a trucker in Arkansas, and he runs a loop, and he has what he calls the what is it called? It's like the Cease index. And what he does is he takes palletized cardboard, puts it on the back of a flatbed behind his semi, and he takes it down to the place where they recycle that stuff. And I believe that's in Louisiana. So from Arkansas all the way out, swinging through Texas, back down to Louisiana, drop off the cardboard. And I drove through Arkansas last year, and I'm like, the economy is fine. There are trucks everywhere going north, south through the middle of Arkansas. And Cease can tell you by how many bundles and how much they want him out on the road, how well the economy is doing because people are consuming things that are wrapped up in cardboard.
absolutely. I used to work with the shipping companies, like the foreign shipping companies, but they would list here in the U.S. And I
Mm.
mean, we would look at, things like the Baltic Dry Index, which was actually a blend of several different indices based upon certain dry bulk goods and, their
Right.
supply demand. But yeah, and that's something that for a lot of my companies that are in that business or in similar
Yeah.
businesses, I always love the fact that that's another selling point for these investors to follow them because they're
Mhm.
a strong proxy to how the economy is doing. So it's worthwhile to listen to these companies and what their earnings are looking like, and so that could be sort of a foreshadowing of what's to
Yeah.
come overall. And I think that's what your friend is talking about. Like he has a good view. He has a good view towards that.
Yeah. Yeah. It's an interesting thing. One of the things that fascinates me is, and I've been thinking about this more and developing it, but I'm not an economic person. I understand principles and that kind of thing, but the money that comes, so I'm a veteran, so I get money at the first of the month or the date closest before that if the first is on holiday or weekend. So that money hits my account, right? But it's never really there. Whether I'm pushing it off to somewhere else or it sits there in a checking account or a savings account, that physically there's no money sitting there. Sure, the bank may honor the amount, but they don't want everybody to do that. And so my money is never resting, and that money just rockets around at the speed of light to all these places because the bank, the second it has,
Yeah.
even before money gets there, it's already anticipating that money coming because it's on a cycle, and that money's already being sent out to do other things on everybody's behalf, my behalf, the bank's behalf. And so it never stops. It is crazy when you think about the concept of money is just light and it just whips around the planet. And all you really can kind of do is put a scupper in the river and just scupper some of it through your account. It's an insane thing. Is that, am I getting this and how much money moves?
No, I mean you got it right. I'm a lot of these most of these banks for their own P&L, they need to lend out this money, and
Mhm.
really by and large the process. And you know, uh, just because you're at one bank and you got another bank here, but there might be sort of pre-existing relationships there where they assist one another when when there's certain withdrawals or certain transactions that are being done. So yeah, I mean, um the idea of having these bank vaults with all of this money sitting around,
Yeah.
and like, oh, so and so, here we gotta, let's count this out and everything. It, all of that. And I think as we move towards
Mm.
more cryptocurrency world,
Yeah.
I think that's going to be made more efficient. Now the question is, going back to sort of that moral hazard, is this going to be something better? Is this going to be something that the government can over-regulate and turn
Right.
into some sort of class system, or some sort of obedience monitor where suddenly people don't have physical access to currency and to their own money,
Right.
that can be taken away, similar to, you know, your Wi-Fi getting shut off. You know,
Yeah.
that's that. I like the efficiencies. Everything that I've heard about blockchain is
Mhm.
very exciting for future transactions. Like I think
Mm.
that's
Mhm.
going to be very good. Where you know two parties are doing a transaction from different parts of the world, and to be able to come close to a point where you're having you know you're having the exchange done instantly. Like, I think that's great, but I also understand the big picture of it too. um
Yeah.
we us people, we have a good idea how to make a good idea really bad. It's true.
No doubt. No doubt. the idea about making an idea bad is well, that's what we're always fighting, right? Whatever good is created, there's always the bad side. And
Yeah.
so, sure, maybe we have less truckers or less people standing on barges to drive them down a river because robots can handle that. Just like there are very few shoe shines anymore, and that used to be a job anybody could go grab. And these things do change, and new jobs are created because of that. But we definitely kind of shove aside some of the moral responsibility for these things. How so when you look at different companies, how important is that social corporate responsibility side of the equation? I mean, I know but this is 30 years ago. My buddy Greg, God bless him, he's a UC Santa Cruz guy. And he's like, I've invested in all of these, what you would call now green technology kind of companies. And he's like, my mutual fund sucks. Like, dude, mine's doing great because I invested in things that, are business things. And if I want to, I can take some of those earnings and put them into some of these other companies. But he was desperate to do the right thing all the time. But it wasn't at that time with the index that he had, it wasn't working well.
Yeah. It's, I'm going to say something that may be controversial, maybe not. Maybe people will be surprised, but
Hmm.
especially in my world, smaller companies, the more you talk about ESG or CSR, usually most investors look at that as this company is going to burn through cash.
Hmm.
And so they're going to be on a dilution spree, and oh my god, there's no way this company is going to rise above it to the point where whatever drop, if there's something there to drop down to the bottom line that can be then returned to shareholders. It's just in the small cap world in particular,
Hmm.
ESG is not a factor. It is not a priority. Um, maybe when you eclipse the 1 billion market cap, you have the
Hmm.
luxury of hiring more of these consultants that will go and start to pick apart your business model and then say, oh, well, see, we can attract, this green life, this clean tech fund that wants to do only invest in, or they'd only consider companies with a strong ESG policy. That's when investors care about that stuff. In my
Hmm.
world, they just care about, are you going to go bankrupt? If not,
Yeah.
what do we need to do to get the company
Yeah.
from where we are now, 10 exit, 50 exit, to a final exit.
Yeah.
It's, I mean, look, all that being said, no one's saying, oh, if you're a small company, I don't care if like you dump toxins inside the ocean. It's like,
Right.
you don't find, most companies don't do that. Okay. Especially if you're a small company, you don't want to deal with insurance companies, lawyers, things like that. So most companies I find here in the US are very good corporate citizens, at least in terms of, let's call it what maybe the original people who thought of the idea of ESG, what they really meant,
Hmm.
which is, hey, have a good environment, have an environment that, we could pass on to our kids and grandkids and everything, society, what we were talking, I think closer to what we were talking about earlier about, uh, growing and thinking about technologies and other companies in the grand scheme of society. And then governance, hey, be open, be honest, be transparent. You're a
Right.
public company, especially, you're taking other people's money to grow. Be transparent, be intelligent, and be, at least in that regard, hold up your end of the bargain. These investors are giving you capital, and you don't have a right to go on a shopping spree if it doesn't mean that it's not going to eventually benefit those shareholders who gave you that money. So I think that's what the original thought, the original what everyone was thinking of when it came to ESG. That's what it was all about, not this woke nonsense that emerged out of COVID, which totally careened it way out to the point where I think they just made it worse. They had a couple of boom years, but now you're seeing companies not walk, run away from ESG, and that wasn't what they wanted to do.
Yeah, that's true. I mean, certain brands can't withstand a big hit, and those big hits are huge. I mean, I don't know how much money Bud Light lost, but I'm not one to. There's plenty of brands that I don't consume. I don't care about the woke part of it because that's really nothing I pay attention to. But if there's a brand and I feel like, hey, you don't want my business, I'm glad to oblige that. And so when I'm trying to resolve a problem and I don't get yes and help, I get no, and you suck, it's your fault. I'm like, oh, this is a company that doesn't want my business, and I just don't go there anymore. And I do believe it. That's sort of what drives a lot of this innovation towards bringing people closer to the company. Companies that do this well, where they're more human, they put humanity in their corporation. I think these companies do well, and just by doing that, you're going to accomplish whatever social thing you want because you're listening, hopefully, to people. So I love this whenever I do my consulting, and they talk about like this is shareholders, or not shareholders, a stakeholder meeting. And I'm like, well, what about the tent? What size tent is this? Where are the tents? Everybody wants to jam their stakes into the ground. I'm the long pole in the tent. I'm like, I don't see the tent here. Where are the consumers? There's no tent. And so
that was the backdoor way. That was the backdoor way to get government into every company, because one of the stakeholders was local officials, regulators, and government, lobbyists. All those people are considered stakeholders because they rise or fall based upon the success or failure of the enterprise. So that's sort of, that was their way to get in. And, and it worked for a while. My gosh, it worked. But again, I think if you're looking, again, to be a company that had the original ESG in mind, that is a good steward of shareholders' money, and I get it. Like, I know that there's people that will go and they'll say, you take every penny of profit and you kick it back to your shareholders, and that's the way of life and everything. That's not reality. That's something out of a textbook. Sometimes you do have to, if you're a company, you do have to throw some money around, whether it be to lobbyists or whether it be to certain charities or other groups, because you have long-term interest, whatever your field is. I mean, if you're in the oil business, you better believe you better be on every leading every oil and gas lobbyist. You've got to be in that network. I work with a company in the nuclear industry, and that's becoming a more of a interesting industry now. It's no longer so much not in my backyard. And I got to tell you, it's like what nuclear's been able to do with a somewhat limited lobbyist effort, because it was always looked at as the curse word. But that's sometimes you have to play that. I don't want to say pay to play, but it's pay.
It's so these go to like again, everything's a competition, right? And so everything is looking, as soon as you think like, we got up here to our market cap is $1 billion. But then all of a sudden you realize you got a lot of competitors and they got sharp elbows at that level too. And it's not just your peers, it's everything. And so when we look at something like energy policy, the least environmentally impactful way to extract oil and get it to a refinery is to use a pipeline and run that pipeline right across the country, right into the refinery. It's just the best way to do it.
Mhm.
Instead, we'd rather buy our oil from Africa or Asia, have them absorb all of the humanity cost of that, then burn all of that fuel to get that oil to our refineries that we hate, that we're trying to regulate out of existence so that we no longer have the ability to process these things. It is the worst way to do it because, I don't know if you know this, but like the hundred thousands of ships all over the ocean, they pollute way more, way more than all of the cars in California. I mean,
Oh,
it's
no
just,
question.
it's
No
crazy,
question.
right?
I mean, the amount, like people don't appreciate the amount of coal that is burned in China. Like the magnitude is something that they can't even most people can't even grasp. And it's
Right.
like, so to hamstring us and our families and their kids and their kids and so on and so
Yeah.
on, to hamstring them by basically, you know, turning off, what is a major part of, what's probably the most important part of our society, which is our energy. As we saw with COVID, what it take for emissions to be cut down. It took society to stop, by
Stop.
and large.
Yeah. Right.
That's what it
Yeah.
took. And there's and it's not, it's all emotion. It's not evidence or science. It's all emotion. And that plays into sort of our original thesis about
Mm.
when you're one of these smaller companies. It's like
Yeah.
you can't compete. It's so hard to compete with the constant pounding of these voices in megaphones. And in that regard, it's bigger companies that can crush you, or they crush you not outwardly, but they'll go and propose some rule change, which everyone in popular society will agree to, which everyone in popular society will not understand what it costs. And then when you do a
Mm.
blanket approach across the board, you're a smaller company, it costs you way more as a percentage of your business versus one of these companies, one of these mega companies that has a whole team dedicated to maybe that one specific policy issue. And
Yeah.
that's sort of where, like, you talk about the idea of fair and unfair. It's like, I don't even get into that because it's so obvious that it's not even worth an argument if someone's going to argue about it.
Yeah.
But yeah, in that regard, it's a shame. It's misguided. In the grand scheme of things, small companies and companies that fit in that sub billion market cap, they employ more people than anyone else, even more than
Yeah.
our government.
Yeah.
That's where the people are, and I think
And
that,
when they thrive, that's it.
yeah. And I mean, not to go into politics here,
Right.
but I think that part of the appeal of the Trump ticket was adding JD Vance and adding in, for the first time really ever, so prominently on a federal ticket, to add venture capital into the mix. And these are people that maybe they mostly invest in the large startups,
Sure.
but still they're seeing all sorts. JD Vance's people are seeing, thousands of companies a year, as well as Ramaswamy's people and Elon's people and all of these, Peter Thiel's people. Like they're seeing, they deal in this world, this heavy entrepreneurial startup, early stage sort of universe, whereas that's never been sort of at this high a level on the, let's call it the government food chain. I mean, because they're right there now, or they're going to be. So it's really it'll be really interesting. I'm getting more optimistic that maybe next year will mean some more meaningful reform. I was just very disappointed that we didn't see more of that in 2017 and beyond, because a lot of people don't realize Donald Trump was at one time a small cap CEO. Like he had a small cap publicly traded company. He was in this world. So he knows, figuratively speaking, he knows where the bodies are buried in our world, in this sort of phenomenon of these smaller companies, what they have to go through. He's seen it firsthand.
Yeah.
So I'm hopeful.
Yeah.
This might be a good sign.
Well, and like you said, people say they want to do things and then they get to what they get to do. And then is it even the right thing? We have a long way to go to see how these things go. Sure. But, if there is a place that has a powerful financial engine, it's this place. And it does seem that when we get out of the way, this is the thing that's, again, I'll go to foreign policy. We look at like a place like Ukraine that's going to need to be completely rebuilt in some parts of that country. We are going to be, because this is what we do in foreign policy, we're going to be desperate for them to do new tech, green tech, all these things when there is energy right there in the ground. And we have industrialists that know how to take dirt and turn it into titanium. And titanium is something we all need. We all love titanium. But we're going to be desperate to not use that answer because they're oligarchs. Like, no, they're really good businessmen. And they know how to put a lot of people to work making things. And I know some Ukrainian businessmen now, and they're like, we'd love to be your guys' new China and then compete with those guys, but compete from the European point of view. And gosh, that's good for all of us if we'll get out of our own way and allow that something to happen.
Yeah. I mean, it's interesting. There's a whole lot of mixed results there. Because the U.S. has specialized in, seeing, countries essentially get a wrecking ball taken to them and then see them rebuild. The logistics and all of that were probably second to none on that. But just in the grand scheme of things, it's like, it's a total disgrace and a shame that this all had to come to this.
Oh yeah, of course.
It's an absolute disgrace. Like I think of Haiti, when they had the earthquake and everything, and how the U.S. at the time, they were really like, oh, we're gonna step in and we're gonna help and all of this, and it just, the political winds have shifted, and but unfortunately for Haiti, but fortunate for Ukraine, they have rare earth minerals in Ukraine. They have essentially enough grain to help feed most of Europe. They have a lot of strategic resources that makes it very important for them to be rebuilt, and and so because of that, they're going to get the treatment, which hopefully means good things for the citizenry. of what's left in Ukraine.
Yeah.
But and it's a shame.
Yeah.
But unfortunately, what the U.S. has had to deal with is the fact that everywhere else is a dumpster fire compared to us. So that's why we're in such more solid footing than the rest of
Yeah.
the world. It's just because the rest of the world is on fire and
Yeah.
awful, like Germany. The
Oh my gosh,
Germans
they're a
2 years
mess.
ago, they decided, oh, we gotta rid ourselves of nuclear and everything, and suddenly our power consumption has gone down just because we can't handle it. And oh yeah, we have a massive recession.
It's a mess.
It is like Europe is a complete dumpster fire, and
Yeah.
it's that's why, like, when you compare all these places to the U.S., oh, the U.S. is still sitting pretty. Like even China's had its difficulties,
Oh
you know,
man.
and from what we understand, and we'll see what happens. And as that, from what I'm hearing, there's going to be more local stimulus in 2025.
Hmm.
But we'll see what that entails. But yeah, in terms of the U.S., it's like we've been a benefit of other nations and regions' misfortune, and that lasts for a little while.
Yeah. Yeah.
But we really
Yeah.
need to get back on track. If this is going to continue, we're going to continue. I'm not saying that that there's really anyone out there that's going to overtake us. I think it would have to be kind of like with BRICS. It would have to be a group approach. Couldn't be just one.
Yeah. Yeah.
But I don't
Yeah.
know.
I mean,
I don't know if that's going to happen.
yeah. I mean, everything's competition, and you have to get that those mid-market cap companies have to want to get away from the U.S. And by the way, we have a Navy, so we control these straits of shipping. Oh my goodness, like you want to get away from. So yeah, maybe BRICS.
Oh
China
yeah.
has its own problem. China has more countries bordering it. I mean, it's crazy. And they have an exploding middle class that consume things. Look what our middle class does to us. When they change their mind about something, the entire nation's mind gets changed, real fast. So it's interesting. I don't want to take too much of your time. I really love this conversation. Everybody should definitely go check out Matthew's website, strategic-ir.com. He does incredible things. You hear him talking about all this high level policy and planning, everything. What do you want to see in closing, and for sure promote what you do?
Yeah. So and thank you, Pete.
Yeah.
This was a blast. What we do, we are a full service investor relations consultancy. Basically, in a nutshell, what that means, you're a public company or soon to be public company. You hire people like me. Hopefully, you hire me and my firm
Yes.
to help develop all the copy, all of all the materials, PowerPoint presentations, scripts, earnings calls, things like that. And we act as essentially we are the spokespeople and the voice of a company while letting the company itself go and run their business. So by hiring us, a company doesn't have to go and spend all the time and energy and worrying about being, everything you have to do being a public company, like, being interviewed, meeting with investors, doing conferences. You can hire us and we fill in the gaps.
Mm.
And we also do a lot of matchmaking where we match companies with investors.
Huge.
We
Yeah.
know a lot of people on Wall Street and throughout the world that invest in these kinds of companies. And one great thing I'll point out is that we work with all different kinds of companies, from nuclear to GMO to data security. We're
Yeah.
all over the place. We are really
I
all
love
over
it.
the place, and it forces me to read up on these unique industries and to try and become an expert. So
Yeah. Oh my
I love
goodness.
it. I work with a lot of interesting companies. So check us out, and feel free to reach out to me. I'll tell you all about our companies.
Yeah, I love it, man. All right, let me roll these credits, and I'll come back and say goodbye to you. Everybody else, I will see you all tomorrow. Here we go. Hey, thanks for watching the show. I really appreciate it. Right here, you can subscribe. Please do that. It makes the show grow. Hit that notification bell so you know which incredible guest is coming up next. Down below is the PayPal link. You can put a small subscription in. That is an enormous help. All that money goes right back into the show. And then right up over here are the next episodes you should listen to, curated by yours truly.